You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, inflation, gold prices, does it matter? Do we care? What's going to happen with it? Our good friend Gary Wagner is with us now. Gary, we've been talking for a decade already. And look, we've gone down this road before. We've seen it happen before. And now isn't a whole lot different than in the late 70s, early 80s. Should mention that Gary's publication is thegoldforecast.com. So, Gary, why isn't gold going up? Why isn't silver going up? And what's going to happen next here?
Well, first, it's great to be here and to be talking with you again for 2022. Relatively speaking, when we say silver's been depressed, more depressed than gold. So let's focus on gold and then we can go to silver. But, gold is sitting above 1,800. The high of gold is 2,088. So it is still relatively an expensive metal. The key, I believe, and the data kind of backs that up, is what's been holding the precious metals lower has been dollar strength. The dollar has gotten enormously strong over the last couple of months. We've seen it weaken this week, though, but it's been dollar strength that has really been the underlying factor, I think, that's kind of held gold back. In fact, if we look at the last 3 days in trading, today, for example, we have the dollar down and gold up. We've had that for 3 consecutive days. And during those days, for example, the percentage decline in the dollar is 0.42%. And the percentage gain in gold is 0.43%. So what we're seeing is that over these last days, these $10 rises that we've been exhibiting since the market hit about 1780, 1779 on the low, has really been predicated by dollar strength, and now dollar weakness has propped it up. I think that the market scenario and market sentiment are going to dramatically change, and they have been. And that's because last month we got a CPI report of inflationary pressures at 7%, not seen since 1982. That's a 40-year differential between the last time that occurred. And so with that in mind, you had the PCE, which is the preferred method that the Fed wants to use. And I can never understand why they believe they should strip out energy and food costs when those are especially energy, that's the largest component of a working man's budget that's going for necessary goods and services. So with inflation this high, and the fact that now even the Fed agrees what you and I have said for the last year, and that it is not transitory, it's persistent, it's sticky, that is really eating into the pocketbooks of Americans. Globally, actually, they've got high inflation. And because of that, we're going to see a real renewed interest in the safe haven asset class. In the case of gold, that fits perfectly. They've even gone to bid the dollar up. But silver, I think, is acting on its own, more of an industrial metal than gold. And it's been kept, I'm not going to say artificially low, but it's an interesting way to view when you look at the gold-silver spot ratio. You've got gold performing now much better than silver. And we could see that on the last rally, because when we saw gold go to 2088 back last year, or 2020, silver went to 30. And so if you look back to what happened in 2011, when gold hit 1920, which was the record high then, silver didn't quite perform as well as it has, but it was more in par with what we expect. So we've been seeing a dichotomy between how gold and silver are reacting. But I think that gold could catch on fire because it is the best hedge long-term against inflationary pressures, and inflation is not going anywhere.
Yeah, inflation is certainly not going anywhere for the foreseeable future, even though Powell et al. Would love us to believe that it's transitory. I always say, Gary, the best things in life are transitory.
That is true. Well, the problem with what the Fed has got this delicate balancing act in which if they raise or jack rates up too quickly, they're going to have a detrimental effect on economic growth and recovery. And if they don't, inflation could soar higher from this point. But here's the real issue. Let's say that they stick to their plan, 4 rate hikes, 0.25%. So that means by the end of this year, they've raised interest from net 0 to 1%. Let's say they actually double that and they do 0.5% rate hikes. That means at the end of the year, that's 2%. Do you think an interest rate of 2% is going to affect an inflation rate of 7%? It can't. It can't. And he's not willing to acknowledge that. And that's the real issue. It's a multi-year process and a painful process to bring inflationary pressures down. We saw that in the 80s. We've seen that before. It takes years to kind of get that back into alignment. Now, the scary part is if the Fed has a target inflationary rate of 2%, and we are nearly at 5.8%, we are nearly triple the target rate. How's he going to bring it into the target rate without raising interest rates tremendously more aggressive than they are? And he knows that the economy can't handle that. And that's the real issue.
And that's a real good question. Well, not just the United States, but what happens to China once, even if these rates go up to 2 or 3%, Gary?
Exactly.
It has a profound effect in China, maybe more so than here.
You're correct.
Yeah. So, their real estate market, all of these dollar-denominated loans that are owed by the Chinese, this is some crazy stuff here.
Well, we're in pretty bad shape ourselves, and that's something we haven't even brought into the mix yet. And that is, if they do take interest from 0 to 2 or 3%, what about our burdening national debt? I believe we're at, about 25 trillion? What about the asset balance sheet of the Federal Reserve? Just south of $9 trillion. If you're going to try to handle the national debt and your interest payments start ballooning out, we're going to have a Secretary of the Treasury, Janet Yellen, pulling her hair out going, we can't make these payments. And so she's going to be faced with that. So there's pressure to really keep interest rates as low as long as they can for the national debt.
Yeah, well, they'll just monetize that debt, right? It won't matter.
In the long run, correct. But at some point, there was an old saying by Barry Commoner, a prominent economist over in the 80s and 90s, and he said there's no such thing as a free lunch. Granted, you might have to pay for it years down the road, but there's going to be a day of reckoning. And maybe not, because the interesting thing is our whole economic system is really an experiment that began after World War II. So you've got thousands of years where money was used. It was always backed by gold. Then you had that slow evolution from a pure gold standard to a modified gold standard, started in 1933 with Roosevelt. But what he did, he confiscated everyone's gold in the United States. And then he raised it from $20 to $35 an ounce. And that's how he solved the Great Depression.
Yeah, well,
but we can't do that anymore because we've sold off most of our reserves. And even if a president tried to confiscate gold from the American citizens, at this point, I don't think that would be something that would be doable, personally.
Yeah, I don't think so. And gold doesn't really play much of a role at present in the international monetary system. So it's messing around with gold will not have the benefits. The reason they did that was so that they can inflate. And they couldn't inflate when everybody was holding gold. So we all know what happened there. So
right.
So we got some interesting times ahead. There's nothing they can do, basically, right?
Don't just survive. Thrive. The Financial Survival Network.
Fury Gold Mines is a Canada-focused exploration and development company committed to aggressively growing its scalable, high-grade gold assets with major drill campaigns planned across its 3.5 million-ounce portfolio. Fury is led by a management team of proven explorers and developers with a track record of success in advancing and financing project development. Fury Gold Mines is well-positioned to create value for investors with low-risk development growth and the potential for a new major discovery. Fury Gold Mines trades on the TSX and NYSE American under the ticker FURY. To learn more, go to furygoldmines.com. That's furygoldmines.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
They can't go back on a gold standard. China's talked about it. I mean, we're moving so far away from a gold standard with the new crypto and digital currencies, and printing presses really running overtime because they continue to deflate the dollar by printing more of them, and all of the other countries are doing the same with their respective currencies. So, and it's not backed by anything but the faith in the government. And the faith in the government seems to be winding down a little bit across the board globally. And so it's going to be an interesting day if a reckoning comes. And if it doesn't, then we're just living on smoke and mirrors, so to speak, and things will run fine. I don't have an answer to that because for the first time in history, we don't have our paper currency backed by anything. And that was the whole idea about the gold standard. And I agree with you. Gold doesn't play that important role now. But the key with gold and silver were they were basically taken by every country around the world as having intrinsic value. So if you printed $1, but you backed it by a cow or gold or any metal, in other words, if I could turn in my $20 bill for, one sheep or whatever it is, it didn't have to be gold. The point of the gold standard wasn't gold. Gold was easy because it was accepted worldwide. It was easy because everyone felt it had intrinsic value, which I still believe it does. But it was the idea when you print paper money, it's backed by something that you can turn it in if you don't want that paper money. And that is the big change that we've seen since World War II.
Yeah, well, going back to Barry Commoner, there might not be any such thing as a free lunch, but there's definitely a subsidized lunch.
That is sad, but true.
So, but all these subsidies are going to run out. So just tell us now, silver, what's the deal there? Just show us the chart and tell us.
Well, I've got a gold chart up. I can go ahead and pull up a silver chart. Just give me 1 second here. Silver's been kept, I believe, almost artificially low. As you can see, it's trading around just above 22. Today, we're at 22.67. We saw a couple of nice pops up to 25, up to 20, 24, 25. And then every time that happens, whether it's a short squeeze that's coming into the market, or because I don't think it's a lack of industrial demand, because silver is such a widely used precious metal, especially the whole green revolution. You can't build a solar panel without silver. I think what it has to be is the talk that you hear the coin selling pundits say is we're running out of silver. But I believe the truth of the matter is we're producing so much of it that we're keeping the price pressed down, because if we're truly running out of silver and the demand hasn't gone down, simple economics tell you that the price needs to go up to kind of compensate for that. We haven't seen that. We've also seen a separation between the tandem gold and silver moves. And in fact, if you look back a year, silver historically on an upswing outproduced gold in terms of a percentage gain, and on a correction had a larger percentage drawdown than gold. It was a more volatile metal, and it's the people's metal because it's so much more affordable. It's easy to buy 10 ounces of silver as opposed to buying 1 ounce of gold. It's $250 to $1,800. It's a big difference. So for those that are a solid working family and they want to put something away in case inflation gets out of control, silver is really the one thing that they can actually accumulate. And so my sense is that if it's true that demand has not gone down, then how do we have a shortage and keep the prices down? It's a quandary to me. I've never wanted to say that the markets are manipulated, but we all know that they're manipulated in the sense of, I don't think it's a conspiracy theory like you tend to hear, but rather the large institutional players, the Morgan, all of the large banks, as well as the large hedge funds and trading firms, these guys get together and they go, let's go in there and sell it in tandem. And so in that way, can you call it manipulation? Well, it is being manipulated by the power of dollars going into the market. And I think that that's what we're seeing.
All right. Well, hey, you know better than me. It just is mighty peculiar. We're in an inflationary environment. In theory, that's when gold is supposed to perform best and silver along with it. And thus far, it's just been a big yawn. But we'll see how much longer that's actually going to happen for.
I can only speak for myself. I started accumulating not a hoard, but a good amount of gold at around 1,400. And I'm sitting with that. Now, I recommend trades in the futures market because for speculation, that leverage is the best way to play that. But I also believe that we should all have 5 to 10% of our portfolio into a hard asset, and I like the metals. So I've been buying about 1 kilo to 2 kilos every month religiously for at least the last 6 months. And it's for the reason that I spoke about. It's much less money and there's much more upside potential because it's been so undervalued. So I think that we'll see silver move back up. My top line is 25 this quarter to 30 maximum. Are we going to see the days where people believe it's going to go to triple digits? Because we all recall when they say, oh, silver's going to go to 100. It could be 20 years down the road. But if you look at the metals on a long-term basis, and forget about the day-to-day noise, the month-to-month noise, even the year-to-year noise, and you look at it historically, the two investment asset classes that have performed brilliantly, and the asset classes I'm speaking about are tangible, not stocks. They've gone up, but they can be artificial because of buying and selling. There's nothing holding that, but is real estate, land, and gold and silver. Historically, if you look back 20 years, 50 years, 100 years, those asset groups, land is never gotten cheaper. And gold has really, it fluctuates. You saw it at 1,400 a couple of years ago, but it's no longer at $700, $800, $900, $1,000 an ounce.
Very true. It's true. All right. All right. Well, we're going to be watching it closely. We'll have you back on to help add some sanity to the madness here. Gary, just tell us where we find you again, how to connect with you on the web.
Thank you very much. Thegoldforecast.com. That's all one word. The Gold Forecast is our YouTube channel, and my Twitter handle is Gary S. Wagner or at Gary S. Wagner. Those are the best ways to get a hold of me and the company. Excellent. Also, one last thing, we have added cryptocurrencies to our mix. I'm really proud to have brought my son into the fray. I don't know if bringing him into the battlefield is the worst thing I could have done or the best, but he has become, over the last 8 years, quite an exceptional analyst in cryptocurrencies. So on our website, thegoldforecast.com, he writes an article. You simply go to the site, there's no charge, and they click on Bitcoin, and they can read some pretty interesting commentary from really someone a lot younger than you or I. Well, and that's where the cryptocurrencies have gone. It is a young person's game.
All right. And you know what? We're going to have your son on in a couple of weeks to opine about cryptos. I'm curious to see what he thinks of the chart formations in Bitcoin recently. It seems to be weak and breaking down. It's trading below all of its moving averages, including its 5-day moving average last time I looked today, but don't quote me on that. And we're going to get into a discussion with him. I appreciate you bringing that up. Hey, any questions or comments for Gary? Shoot me an email to kl@kerrylutz.com. We will get you an answer. Go over to the site, sign up for your free newsletter, financialsurvivalnetwork.com. Gary, always a pleasure. Thanks so much.
Pleasure here. Happy New Year to everyone. And let's just hope for health and happiness.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.